Today, I want to talk about something really exciting, taxes. Everybody loves taxes, right? Well, with all the increased taxes and the discussion of possibly 87,000 new IRS agents, I want to talk about a tax that maybe you haven't heard before. It's called the silent tax. Well, really, it's a code name for something you have heard about before, inflation. Here's the thing. Inflation really is a silent tax for those that either don't take advantage or don't understand investing. Let me explain what I mean here. Look at this. Capital One, the bank that Christine and I, we bank with, it's a great bank, but Capital One, their savings account, our particular account, we get an annual percentage yield of 1.7%. So what does that mean? If I have $100 in my savings account and I wait a whole year to use that $100, then that $100 will turn into a whopping $101.70. So what that means is that if I keep $100 in my savings account, I do nothing with it, I leave it in my savings account with Capital One, then at the end of the year, then I'm gonna have another $1.70 because they're using my money, and so they're gonna pay me back $1.70 in annual percentage yield return of what I've left with them. Now, that doesn't sound amazing, but I guess it doesn't sound terrible. At least I'm making money for keeping my $100 in the savings account. Well, it doesn't sound terrible until you understand inflation. I want you to look at this graph with me. What you can see in this graph is that right now, we're at an 8.5% inflation rate. Earlier this year, we were at 9%, so I suppose 8.5 isn't as bad. But here's the thing, we need to understand what inflation does with our money. If I have $100, whether I'm keeping it in my savings account or whether I'm keeping it in my pocket, and I don't use it for a whole year, what I need to understand is that what would cost me $100 to buy today will actually cost me 8.5% more a year from today. So if I buy something today that is worth $100 today, if I wait a year to buy that thing, it's gonna cost me $108.50. So we need to understand this. If you are keeping your money in a savings account, and let's say you're getting a 1.7% return, in reality, at an 8.5% inflation rate, you're actually losing money. Because the thing that would have cost you $100 to buy today is actually gonna cost you $108 a year from today. But your savings account is only giving you $2 rather than the $8, which would counter that inflation rate. So here's the thing. Keeping your money in the savings account, it's not a terrible thing, but if you're keeping a large amount of money in your savings account for a long period of time, you're actually losing hard-earned money. So this is what I would suggest to you. Whether you own a home or you don't own a home or you own many properties, if you have enough money to begin investing, or if you're not sure and you might have enough money to start investing, you should reach out to me because I want to talk with you and share with you how we can combat inflation and help you to invest in properties that are actually raising in value as time goes on. So please reach out to me. Again, my name is Ben Meyer. I work with Peak Real Estate, and I'd love to help you out.